Hey everybody, welcome back to Swing Trading. My name is Mike Fairbourn. Hey, looking forward to our discussion today, looking at a number of different stocks moving with the market. They've been moving for a little bit. I want to focus in and key in on the McClellan oscillator and some of the signs that it's given us and what it might tell us just going ahead. A short-term breadth momentum type based indicator. Did want to focus in on that today as we look for different sorts of swing type setups and swing trades. Welcome to all of you. I hope you're having a good day in the markets. It has been a really interesting bounce here that we're seeing from the markets, and we're seeing it across the board in a few other areas too that I did want to tap into. We're going to be looking at a couple of different sectors. We'll break that down for you as well as that indicator, and we'll look at different some sector strength as well as we tie this all in together. But with that, I'm joined in the chat by a good friend and colleague of mine, Brent Moores. You'll see me in the chat as BM. And you can follow Brent on X at Brent Moores CS. I'm there, Mike Fairbourn CS. And with that, everybody, let's get going here and get rolling. But just a quick note to those of you, hello, Cecil. We've got Michael, Austin, Lance. We've got Beck. We've got Brian, CD. Some new names out there too. Rojo, Scott, and Will. Good to see you, Will. Kevin, Life in the Fast Lane. Robert, Richard, and many others. Hello to you, Sharon, Olga. Folks, any questions, comments, throw them in the chat so we can address those for you. Let's hit our disclosures to get going. All right, this material is intended for general informational and education purposes only. Options carry a high level of risk. They're not suitable for all investors. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. paperMoney software application is provided for educational purposes only. Now, investing involves risk, including loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends, as we look at those, are not guaranteed. Futures and futures options trading does involve substantial risk, not suitable for all investors. And we just show this slide because, hey, we're just looking at the charts only, not trading. Okay. Well, with that, let's go ahead and pull up some charts. We got some breakouts today. We've got several other moves out there in the market as well. But here is a general look. We got to look at it because we have been talking about it for a little bit. But that is the move with that measured move. Off of the bottom on the measurement gap. Specifically, I'm trying to get my numbers lined up here, but I'm just setting them up here so you can see this. But yeah, I've drawn this. I can draw this too. But yeah, you can see here clearly. Yeah, so we've got the move off the bottom to this gap, and then we've got the next move coming up. Now that does exceed the prior high range, the prior high target. Well, some would say above, well, resistance is what I'm getting at right there. So you've got a resistance line drawn right through there, and that does line up very well with that big round number at 7,000. But if we're looking at an actual measurement gap, that is measuring off the bottom of the gap, top of the gap on up, you can see where that takes us. And by the way, folks, remember, this is a form of a swing trade. It's a swing trade. The swing trades, again, that we look at in this class. And it's so nice to see some bullish moves over here. Been previously but bearish on the way down, no doubt about it. But bullish now, at least over the time frame, this historical time frame that we're looking at here. And on the swing trade specifically, that we're looking at really a 3, and I've seen it go all the way to 20. So 20 market days is real close to about a 1-month time frame. They can be quick, they can be short, but as you can see right here, look at the first part of this measurement gap potential. Remember, it's one of 3 gaps, the measurement gap, and let's just draw this range up here to this top. You can see that's not a lot of time. I mean, in terms of, market days that we're looking at, actual bars themselves, 1, 2, 3, 4, 5, 6 fits nicely in our time frame there, doesn't it? The 3 to 20 days. 1, 2, 3, 4, 5. Will we have one more bar that comes up here and hits off this high level? Well, we certainly could. There's no doubt about it that could unfold that way, but it will be interesting to see how, in general, things unfold here. And welcome to those of you just joining us here in the class. Good to have you on board. You are slightly late, though. No, you missed the disclosures, but you got the first portion of the market here. We're looking at it. And with this market, A quick note. I'm joking about those disclosures. Those disclosures are recorded. They're saved on our broadcast as well. But want to take a look at a couple of different things here. Now, we did see that RSI bounce off the bottom, this movement over here. Now, one thing that I will talk about in my markets and sectors class, we hit it every single week, and it's this concept right here, and that is breadth. Breadth. What about the total basket of stocks out there in the market? Now, there's a breadth indication for the S&P 500, but we can expand that out. We can widen that net out further to what's referred to as the NYSE, right? A lot bigger, almost 2,800 companies in the NYSE. What I'm getting at here is when you get market breadth, it can give indications of a rally. And a lot of traders will say, if you want to see something like this, now that's a weekly trend. That's an obvious higher from the left-hand side of the screen to the right. That's a lot of gains. That's near 1,000, and that's, like we said, near 7,000 over the last 15 years. I'd say that's a pretty big gain in the basket of stocks in the market. But there are a lot of companies in the S&P 500. There are several times that number in the NYSE. If we go over here and we look at a basket of companies, I'm going to pull this up right now. We'll have it join with our RSI down here for now. McClellan Oscillator, and there you go right there. Tom McClellan is the individual's name. Do I want to make these thicker? Oh, shoot, might as well. Here we go. We'll just thicken this one up. Let's do this. I'm going to show it to you right here. Now, I'm going to pull it up right here and explain to you what's been going on here and what it can foretell, perhaps, what it tries to foretell, this indicator going forward. We don't need the RSI so big, but I left it on anyhow. Now, a quick note, I'm going to break this down so you guys have a good feel for what's going on with it too. But it is a short-term market breadth momentum indicator. And basically what it's looking at is the breadth of the market. What about the total number of stocks? And it does this by tracking differences between, there's a short-term and a long-term exponential moving average, and it looks at net advancers minus, advancers minus decliners. It looks at net advancers. This is what's going on down here. We're going to relate this to stocks real quick, and I'm going to highlight this for you. Look over here with me. I'm going to use yellow against that backdrop. We got a lot of blues there already. Okay, we are dropping lower, dropping lower. Now, there is a divergence here. Let me explain what that divergence is showing. Okay, as it does focus on the NYSE, like we said, significantly bigger basket of stocks. All right, real close to, getting close to 5,000 stocks out there. We're in the 500 up top here. Okay, so we're reading the NYSE relative to the S&P 500 here. When you see this on a short-term basis, short-term, I'm focusing in on this range right here. What is happening? Prices are falling in the S&P 500. Now we're looking for signs of a bounce in the S&P 500. Let me tell you what's going on right here. Yes, there is divergence, but we're getting the number of advancers relative to decliners in the NYSE, folks. More advancers over decliners on a day-to-day basis. And basically what's happening is if you advance relative to decline, less decline amongst a basket of stocks, the breadth of the NYSE, you're getting more companies that are actually starting to go higher here. Do you see it? That's a low. This is positive. Very positive sign of divergence there. New low in the S&P 500, less lows in the NYSE, and on a short-term basis. Got to highlight this, running out of color, so I'm just going to put it in red. Higher highs, higher lows. Breadth is oftentimes really critical for those long runs that occur over a period of time. That's what we're seeing. I'm using the S&P 500 because when the S&P 500 shows a risk on, in other words, we start breaking higher, breaking the 200-day moving average, the 100-day moving average, we start extending higher, we can see strength. Now, I do have this parked in the back of my mind. It's kind of a crazy news environment, but that news has shifted more positively for sure, and we've seen the market respond with that. So focusing on this oscillator, this is what's happening over here. Higher highs, higher lows. Now, Tom McClellan, the guy that invented this, named it after himself. Okay. He said this. He said, once this indicator goes below minus 100, and you can see it right there, okay, and then goes back up above minus 70. So below minus 100, and we had that for a while. You can just sit, 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 but it goes above minus 70. Here's zero. You have to climb higher to get above it. What basically he says is, and this is what his line is you're looking for a 2 to 3 week rally. Okay. And this could be, we're looking at the upside because we're going off the bottom right now. Okay. 2 to 3 weeks. Now, if I look at that, folks, right here is about a week, and we're coming up on 2 weeks here. We're not quite to 2 weeks, but a lot of the rallies traders will say fall right in between that 2 to 3 weeks. Now, we could be towards the upper end of the range. Does this make sense in the context of what we're focusing in on here? Well, let's take a look. Where's our target for that measurement gap? Well, it's just above a level where there's a lot of resistance here too. So of course we want to be mindful of this, but it's saying as a swing trade, 2 to 3 days, could we actually extend higher through here? It's saying there could still be, some more strength to unfold. Now that right there could be very interesting for our swing trades in other stocks, which we've got plenty to look at. In other words, the bull flags. If we're stuck somewhere over here, we're getting going. Yeah, there still might be some room to approach our a potential flag type target. And that's the focus. Okay, what we're looking at here. But 2 to 3 weeks is he'll say, by the way, at least you'll get that, a 2 to 3 week. Now, we do look at historical numbers here, but things, of course, can change historically. I'm just going to show you this. We've been talking a lot about this. I highlight it every week in the markets and sectors class on Friday because it is interesting. Let's just click on that over here. I'm going to just show you some of these areas. Now, it's used on the market, but like we said, if the market's doing that, don't you think some of the stocks in the market are doing that? How about over here? What's lifting the S&P 500? Stocks. So ultimately, we're on our way to the stocks, and we're getting there really, really quick. But look at this with me. There it is. Minus 100. Breaking above minus, you go below minus 100 and you cross above 70. Where does that take place at? Right there. Was there a continuation? There was. How about over here? Minus 100 above that minus 70. Okay, that level was right there. Did we get a 2 to 3 week rally? I'd say that's a solid 2. This one went longer. How about over here? We dipped again off that low. Where was the signal? Well, guess what it's on? You know what it's on? It's on the days following that drop. Is it strong enough, that recovery off the bottom, kind of like this bar right there? Is it strong enough? Strong bars can make a difference in market breadth because what's causing it? Well, on the NYSE, a large number of stocks are causing it, folks. Did we get a move there? We did, 2 to 3 weeks. How about here? Yeah, that one right there. We did dip below. There's your recovery. And again, with divergence off the bottom. This is why a lot of traders will use that. Now, it's not always down there. In fact, this was separated by how many months over here? 1, 2, 3, 4 months, almost 4 months before we got a signal of market strength. Because what is this indicator again? It's a market breadth momentum indicator. Okay, it's looking at net advancers relative to decliners on the biggest basket of breadth we've got, really. In terms of indices that are popular, fairly popular, and that's the NYSE. Okay. So with that, we can look at other market bounces as well, but that is how it can be used. Now, a quick note, just take a look over here in the chats. How we doing? You guys got it, but you guys saw how I added it, right? Okay. So yeah, there are other indications around the zero line for sure too. Yes, there are. There are some. Yep, there are some that you can look at as well. But that's the guy who invented the indicator, Tom McClellan, and that's what he looks for are those levels in terms of you're looking for that short-term momentum. And when I say short-term momentum, folks, isn't that all about the swing trade? 3 to 20 days, trying to find the strength of the strength. Now we're just going to add that behind the scenes and to our some of our trades. But notice we've seen that for a little bit here, just over through this range here. We got a little bit of a bounce. It was a lot of news, kind of threw us off guard. But a lot of the swing trades we've done in this class, let's say, the paper trades, they're all paper trades, just example trades. But notice that they had a little bit more to them, maybe when the market itself was showing strength as well. That market strength we were getting indications from NYSE, market breadth. You got to have a large basket of companies actually. I mean, if a large basket of stocks are showing that trend, maybe we can see that strength. So let's take a look at some of it right now. I'm going to go ahead and take a look at some companies for our trading today. So here is eBay. Now, what's interesting, we've used this before. We're coming back into some of these interesting trades. I like to show a 1 year because I like this top potential top area. We are getting above, it's a big round number, 100, but we've been making some higher highs and higher lows to get towards that 100 and possibly, bam, bam, take it out. Maybe. I mean, maybe we'll see, but look at this. And you guys are going to pick up on this, but you guys already have previously. Now that's a longer term bull flag. I got to change the colors to kind of highlight it. It does get confusing. Possible bull flag, right? We already had a breakout. And what did we have? Blip right there. The test on the prior highs. So we did hit a T1 target here, but for the T2, let's just eyeball it. You guys tell me, do we have a little bit more in the tank? I'm just eyeballing this move to this move as a flag pattern, right? The flag where you make a lot of gains in the market and you give back very little relative to the gains. That's the formation of a flag. Now, we've already taken out that high. You can see it up here. And we've bounced, and now we're ready to extend again. Perhaps. I mean, we are today. We're extending today. We'll see if that does continue. But how does that pair up with SPX? I'd say it pairs up because we just looked at the McClellan. We have some more room to potentially run, and it could fit within our range. Now, as you guys saw the bigger flag, is there not also a smaller flag in here too? How many times have we seen the smaller flags form within a bigger flag pattern right there? You see it? You guys know where I'm going with this. Excuse me, right to the top of where that would be. Oh, okay. Well, let's just draw this other one in blue and see how we line up. Remember, I'm just measuring this price. Close. They're somewhat in there. They're probably very close. Sometimes they're right on the money. You're getting a flag, folks, within flag. Flags within flags, perhaps, could be unfolding here. So whatever number we're looking at here, let's go ahead and set up this trade right now for our first trade example. Now, keep in mind, there is an earnings number here. Now, park this in the back of your mind, too. Earnings can be equated to more volatility. In fact, we see that implied volatility. I mean, there's an indicator named implied volatility, and it oftentimes will jump around earnings because there's an expectation of a move around there. Now, having said that, though, we have this volatility. Do we have time? Do we have time? Let's look at it. Tick, tick, tick. What are we talking about? 3 to 20 days. And in fact, we've already got a few days under our belt of this move. But even if it's the short-term flag, what do we have? Well, what was that? 1, 2, 3, 4, 5, 6. 6 days. That's just like 3 more days from here. I'll say 3 to 4 more days if it follows through, which a lot of these flag patterns do. The first part of the, let's say the ABC or whatever it is, using some Elliott wave lingo, if that as another 3 to 4 days, gosh, well, that's ahead of earnings. Let's use the bigger flag too and just see if this can all occur before earnings. Now, if it occurs before earnings and you get your target, well, sometimes that's when some traders will just say, that's it for me. I'm going to get out before earnings because I hit my target. But coming over here, let's look over this one. So this one, I'm going to cheat a little bit and just use the thinkorswim instead of counting it. From the bottom to this top here, well, that was 13 bars. How are we doing over here? Oh, that's 11. So, I mean, 13 would be right there. So that's like 2 to 2 days or 2 to 3 more bars. So we have time if we're looking at the end of that unfolding. So you say, is that worth our while? Well, prices could come up to this range. I mean, we're at we're at 100. Maybe that's near 106, 107. So it's just a short-term trade, but let's put some potential stop level exit points in here, potential exits to get out as well. Before I do that, let's just quickly be a little bit more exact and precise. I'm going to use the short-term flag right there. Okay. The more recent flag pattern, I'm going to, we can go ahead and I'll duplicate it just for the sake of those still learning these patterns and go like right there. You see it? So that's more like a 105, 106, whereas the bigger flag might be a little bit bigger, but I'm taking that right. Let me just double check where I'm at there. Hang on a sec, folks. Yeah, we're very close to that level. Okay. Yeah. Well, anyways, so real close to 105-ish. Now, that's the target. Could it run higher? We've seen it happen so many times. It might run with the bigger flag and extend up a little bit higher. It might actually just do one of these and go really sharp over the next couple of days. Okay. So it could go down as well, right? We're just looking at that upward move as a possible trade, but I wanted to put this in here at that point. So could represent that range, but we want to be very careful that if it does go against us, that we get out, fairly quick, maybe a stop below today's low. Try to get out somewhere in that range. Let's go to our trade tab right now. I'm just going to do, it's still fairly expensive. It's in the 100 range. I'll just do this as an example trade here. What do I have? I'm going to delete that. Okay. Right click, buy custom OCO. Let's just go, we'll link this up and we'll go 50. 50 shares, go GTC. Put this down to a stop order on the downside, limit on the top. Let me just see what this looks like. 105, 50 range or close to it. It might have been 25. I'll just go 25. And this one closer to the 98.50 level. Okay. Confirm. Let's read through this and see what we've got. I always go through the dialog box to make sure we've got what we wanted. And let's go ahead and send it through. Okay, now the one thing I wanted to highlight here, I'm going to zoom in. We haven't got the fill yet, but I'll zoom in on it. In fact, let's just do this. It makes it a lot easier. There's a 6-month time frame. I'll just squish it down a little bit. Make sure there's our target. So just kind of about that level. Now, I'm going to put that lower stop. I'm just going to drag it right now and just put it just kind of right there. Now, could we raise it up a little bit more? We could. And some traders might even say, you know what, Mike, this could be a support level too, which is true. We could bounce off a support here as well. We only used 50 shares in this example trade as opposed to 100. So the 50 is maybe not as much as somebody, using 100. So if the price did perhaps go against us, we're only losing on a 50 share versus a 100 in this practice example. Okay. So that's our first example here. Now, another one I wanted to get into too that is a little bit interesting. We're talking about STX Seagate. So it's interesting because on one side, we've got AI impacting a couple of similar companies, but they are different. AI, well, I don't have it up right now, but for Micron, Micron is all about the memory. Okay. And AI for STX is all about the storage. And there are some really interesting storage. Let's see. They're fairly cheap, but they're really quite strong and they're easy to outlay, which is exactly what AI is looking for too. Look at this guy. This has been on fire too. The thing I would say here, looking at this closely, look at up to the 500 level. You see how we paused right there? We just went sideways, sideways, sideways. That's a way of sometimes accepting a big round number. You get some sellers there, but my gosh, that's like what you might call even a bull type flat. It just goes like this. It's like a flag pattern they say with a strong wind, as opposed to these kinds of flags. Looking at it like a flag, right? There's hardly any give back at all. So what is the target here? Target here looks a lot like this. Let's just use a more exact method here. I'll show you guys another method on this approach too. Just click one time, go up to the high. This is going to be interesting, but what is the low before the move? It's actually like before the move, I would actually call it that green bar. I'm going to right click now and just simply go to activate, pull it right over here. to the green bar range. You're going to get a general idea where that thing could be going. Now, in terms of the cycle, this might be a little bit later. Maybe it runs a little bit more. There's a lot of strength right now. We have to say that in AI, right? And that AI build out. There's a lot of strength. And even if the market were to jump up, let's say on the McClellan, it kind of flattens out around 7,000 or above it. If that unfolds, if that's the expectation, this one might still have a little bit more to go. Uh, when in doubt, just back it out. I'm going to back it out to a 2 year so you can see where we're at. Okay. So sometimes when these flag patterns kick, they can be, notice this flag here? That was fairly large. Okay. This is a very, very strong type pattern. It doesn't need to just go to this level. I mean, well, obviously that could be the first target point, but it could go higher. Now, it could also find some resistance at the next round number, which is 400. We really didn't get that over here. I'm just looking at big picture, some of these to keep an eye on. We blasted through 400 initially on this run, but let's zoom on down. Now, I'm going to do this because we've talked about this before too. When things get a little bit crazy like this and you get some really, really strong moves in here, and it's kind of hard to tell. I mean, I picked up on a flag pattern there. I mean, I'm sure you guys, many of you guys did too, if not all of you. You saw it right there, right there. But how do we get to see it a little bit easier? Remember, we talked about this. It's called the 30-minute chart, which we did line up in one of those classes that we did. There's your 30-minute right there, and a 5 for shorter term. But what does that look like? Could we maybe look at this too and just see with one simple click on the chart? Boom, it's right there. Oh, well, guess what? We're getting another bull flat right there. Right there. We'll pull it down and see it. Yeah, in fact, I'll just zoom in. There you go. Gosh, that doesn't look as great when I zoom in that way, but there you have it. There's the range right there. Let's just take off that little bubble for a second. Price. Where are, oh, general, sorry, bubbles. So we can kind of see it, but is it getting close to actually giving us a signal here? Let's just say that it is, or it's breaking above that range. I did want to put a trade on regardless, just so you could see it. But this is a $500 stock, and it's one to kind of keep an eye on, to be mindful of, actually. It is. I mean, you want to keep tabs on it just to be careful. I mean, it's expensive. In other words, obviously you put a round lot in here, 100 shares. I mean, it's getting up there, right? 50K, whatever it is. I'm going to use a smaller number of shares just for an example here in this class. But let's just say on a 30-minute chart, we're looking at that move. But by the way, there's also a mini, since we're using the 30, what's this? There's a mini flag within a mini flag. So there's actually a 30-minute price target as well. We do that though, and we talked about it in that class because it does give us some insight when things get a little bit hairy, a little bit hard to see. Keep in mind, what's the backdrop in the market? There are news events out there that right now are looking more positive. I mean, obviously the market's responding more positively, but things can change. Brent and I have seen that over the years, folks. It can change pretty quick if there are volatile news events. But again, there could be one of the reasons why we're looking at this stock is there could also be a core driver behind it. All right. And that could be that AI growth. And that's really, I mean, I think a lot of what you're seeing here. So let's do this. Let's put one on right now. I'm just going to shoot for this bigger one though. We'll keep an eye on it. We're back to our daily with one little click there. But be mindful of what could be occurring intraday. Now, as I do this, let's just go right click over here by custom OCO bracket. I'm going to do this. I'll be honest with you. I'm just going to go all the way down to a 10 shares. It's a $500 stock. And what's going on now? Let's do that again. OCO bracket. 10, tab through, link it. Okay. Cancels, and we'll put our stops in perfect place, but good. We got to stop, got to limit. Now the target, I'm going to show you a little way to do this too, just to create some variations. We'll just go 538. And down here, we're just estimating, really. That's 1 point lower. I'm happy to do 1 point or 2 points off the target for potential exit level, known as the stop. And there we go. Let's see, confirm and send. Let's take a look at that order dialog box. And the key thing here is when I do hit send, you can see we're buying. The two areas we're selling. Let's what did I do wrong? Did I not tab through? We don't have a trade on. Hang on. Sometimes when I'm talking and thinking and clicking, it takes a little bit of time off. Let's do that again. Click. Okay, we're locked in there. Good till cancel. Good till cancel. My guess is I wasn't low enough over here. It was like 5. I'm just watch this. I'll show you this. So we'll do 525, quite a bit lower. And this is going to be like 538. Look okay? We're not going to get that fill now because we haven't hit our target, potential target, and we haven't hit our potential stop. At that point, at 530 is the price. Now we'll go. We should get hopefully an order in. And what I'll do now is back this back out. And I'm going to go into shorter term time frame and zoom in. Ooh, that's still hard to see. And our stops aren't really doing too much. Now that's better. The 30-minute chart, actually, just go to the 30-minute chart. There's our stop. We'll pull it down. I'm going to put it, down in this level here, about 50% of this move to the upside. If we start to break below that 50% level, we could get out. So the target's going to go substantially higher. In fact, what I need to do now is actually, I'll pull it up and I'll back it out again. So we're probably right up towards this level here in terms of what that looked like. Send that through. And now we've adjusted those just visually, which you guys are very well aware of anyhow. Okay, or close to it. You can see our target. We're getting there. Okay, fine. There you have it. And there's the order. Okay, and they set up. Okay. All right. Well, here's one too. Just because stocks are breaking out and showing strength doesn't mean we can't look at other sectors as well. Other sectors that traders might be focused in on. Here is J&J, and you can see over here with J&J, back this out to a 1-year chart. Let's see this now. Do you see the long-term consolidation? We might get measured type moves that could occur in here, like to similar highs and breakouts. We could also get, yeah, weekly type flag patterns that, by the way, they can be pretty quick when they come out. But, what are we looking at in terms of a 1 month? How much of a gain can we get in a 1 month if this does actually start to move? That's the real question. If I back this off down here, I don't need the McClellan on these, by the way. Remember, that was just for our markets. I just took it off. So there we go. We're just doing our RSI right now. We could throw in other indicators too. But if I'm looking at this type of a move and I said longer than 3 days, like if here's our move right here and we run up like this, folks, that's a very, very strong bull flag. And by the way, that's earnings. I chose this for earnings because markets are responding somewhat favorably today. We haven't really broken out of our range. If we look at it close, I can see it real close because my eyes are right next to that big screen, but just in case you can't, we do have a bullish engulfing pattern here. Now, I would like to say this, that some traders might wait for further signs of confirmation because, gosh, it's not our first time down here, is it? No, we've been down here basically through March. March. This is March. This has been down since March. But if we start to take out a high here, some traders might say, I'm looking for a 2+ day reverse or something like this. At least a follow through day. You could wait for something like that. I'm going to go ahead and elect to do that for this because we've got earnings here as well. Instead, what I'll do is I'll put in the old alert. Right click, create alert. At or above the point that I just pointed to. And I'm just going to say higher. And then, take a look at it. Now down below, if you want that to be notified mobile on a mobile device or email, you got to have that selected. Otherwise, it just won't happen. And remember, you can set these all up top, as you guys know, up top here under setup and application settings. And voila, you go over to notifications, you can put your email and your text message, and it gives you some info about that too. But I just wanted to quickly say, just on alerts, that they're not guaranteed to be delivered or delivered at any specific speed or time frame and should not be used as a replacement but for an actual order. But I just wanted to tell you guys, I have not had an issue with alerts. My alerts have come through, but we're just saying, yeah, things, we can't guarantee those alerts. Uh, but like I said, yeah, it's been a very effective tool for me. I've used them just to be notified of levels that are breaking. Okay. So I'm using that instead as we get above this range because I just want to see what happens post earnings. Don't you guys want to know? Sometimes earnings can be a big event. Sometimes you can see a big day, and then what do you see the next day? It's something that looks like this, a red bar that comes down, but not every time. This consolidation plus a beat on earnings. Now we beat earnings, and we'll see sometimes that conference call can impact what's happening with those stocks later on in the day, even tomorrow. But sometimes, too, you're just looking for the trend to continue. We've been flat through all of March. If we look at this earnings announcement, you saw something very, very similar here. What did you get the next day? You actually broke higher, and we ran. That was the last earnings, was the first part. We'll just call it what it is. Part one of the flag. Now, will we get a part two? It's the question. But that's what we're looking for in this class. Now, the last thing, because this got confusing one time, and I just want to make sure we're clear on this, because when I talk earlier about, yeah, we're holding to 3 to 20 days, some people say, gosh, Mike, that's just too, this is towards the tail end of that range, and it is. You guys would be right that said that. Yeah, we're not talking 3 days. We're talking more like closer to the 20 days, dot, 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 plus or 2 or 3 days, plus 2 or 3 days possibly. Because look at this. Here's this part of the month. We actually ran about right there and just a titch more. But my point is what would that flag pattern be? It could be higher. It doesn't mean you couldn't try to get out earlier too if you wanted to. I mean, we use moving averages for that. That was another discussion we had. Okay, let's hit a couple more to highlight these. We'll go from there. Now, a couple stocks a little bit later in the cycle too. JPM switching gears into a different sector once again. Okay, look at this gap. Measurement gap off the bottom. We were getting close on the S&P 500, but what about here? We might have a little bit more room, specifically off of, I guess I could say that bottom to this top. So I'm measuring this range, but we could have a little bit more here, question mark. We don't know, but this is one that we could keep eyes on. Did we get earnings? Oh, yeah. This is a week of bank earnings. It really is. In fact, if I click right there, let's point to it. We beat earnings and we're up. So could it extend? Quite possibly. It could. Yeah, it could. One more. One more, and we'll call it a day. ANET, another one that could be a little bit later in the cycle, but you could see, well, actually, no, I'm not going to say later in the cycle on this one. This is just kind of basically doing this. See how we might have, actually, you know what? We might have actually hit a target already on this. We came dang close. I think we're almost there. So what could be interesting on a stock like this breaking out? We saw this on VRSN too last week. Some of these companies, these tech companies, look over here with me. That's resistance, and that's 150. We can find support at sometimes at these levels. And so if you break up above here and you kind of hold earnings, break up or break down, that's something we'd have to keep an eye on. Keep an eye on something like that. VRSN, just as our reference point, VRSN. This is one that broke. Okay, so this is what I was referring to. We had this breakout on VeriSign, right? Okay, this was actually, some would say, a very interesting level of resistance that we held on to right there. Now, it too does have earnings. This was resistance as well. There was kind of a band of resistance, which is oftentimes is, call it a band or a range of resistance. Well, now it can be a range of support right there. That has the makeup of a change in trend as we're kind of getting there, kind of setting up for a wee bit, possibly, of a bounce, but it might pause because you've got earnings right here. Do you see how the flag could do this though? Look at this. We could wait before it starts to move, but I have to say this. I'm going to set up another alert in here. We had a couple of alerts, we had a couple of trades, but what if I just did this? What if I said, because this actually was a close above the high of the low day. Here's our 30-minute. Let's get an eye on it. Oh, yeah. Okay. There is actually a bit of a waiting. Shoulder, head, shoulder. This is part of, oh, that's actually a face, but it's actually part of a longer term flag pattern that we just saw on VeriSign. So what do we do now? We just look at it on a 30-minute. That's what we do. What's the flag pattern on the 30-minute, folks? I should say, what's the price pattern? Well, it's an inverted head and shoulders pattern. It does look like a face, though. Yes. If you guys caught that. Oh, okay, here we go. That's the range right there. So if we break above that range, first target is about right there, real close to this high. What is that level? Does that even represent an interesting level to look at if we were to take that out? Okay, so 271 up to, I'm just eyeballing it here. Got to get the right tool in, and there we go. Diagonal line, breaking above this range. 11.5%, about 4.26%, about 11.5 points just to that range. So you can actually even trade, what is that? Target T1, but we're saying it on a short term. Now there could be a longer term, as you guys know, full and well, and that longer term could be something a lot like this. Like this. You got the T1 is right there. We just saw it, 30 min. But if you come up here, that's the T2. So I am going to put in here a target, and you guys know where. You guys know now what that level represents, these highs. So if I can get back up to this level here, just notify me. What a great little tool to have, to try to use on these alerts here. Higher, okay, question mark. Mobile collect, and we're good. All right, everybody. Well, hopefully that was informative. If you found this discussion useful, do me a favor, smash that like button. It just lets me know, lets my manager know, lets us know that, hey, it was useful. Gives Brent and I a sense that this class, you got something out of it. Again, follow us on X, Brent Moore's CS. Here's mine right here. I'll just pull it up right now. Mike Fairbourn CS. I shot through this to kind of give you a feel for what's happening later in the week. And by the way, can I ask somebody to please be number 10,000? I'm one away. I've been bouncing around here for like 3 months. It's been a while. Can I finally break 10,000? I only need one person to do it out of this group. So there it is right there. I wouldn't ask, but I mean, it's such a round number. So anyways, folks, give us a follow on X. By the way, we do have some good info in here. I know Brent and others repost this as well, but that's our Schwab trading with some of the earnings this week to be mindful of. Folks, a lot of banks in there. All right, everybody, give us a follow too on our channel. That is our YouTube channel, Trader Talks. Let me just quickly post that in as well. Sorry, I didn't have that up. I'm supposed to have that up. Okay. Ready to go. Oh, let's join this together. Right there, it'll just say follow. Get the playlist, you get everything. Of course, there's no charge on that. All right, everybody. Did I get 10,000 yet? Did anybody give it to me? I'm just curious. Yes, thank you. I haven't seen this ever. All right, you guys. I appreciate it. You guys have a great rest of the day. Hopefully that was informative, useful for you. I do hope you have a fantastic rest of the day. It's always great to be with you. We'll keep tabs on these stocks. We'll take a look at them next week. We'll review them and get rolling. And on that note, everybody have a fantastic rest of the day. Thank you so much, Brent, for your help in the chat as well. Take care, all. Bye-bye.